The broadcast is now starting. All attendees are in listen-only mode.
Hello everybody and welcome to the weekly webinar every Wednesday, same time at 2 p.m. GMT time. We're doing this webinar at GMT time since we have customers from all over the world at FMFX, and now we want to give service to all of you. So welcome you guys on GoToWebinar, and welcome you joining us from the homepage of Facebook. I would like to show you, by the way, this is our homepage, as you probably know, fmfx.com. And I just want to do a technical check before. Just write me down on the chat window or as a comment on Facebook that you can hear me and see the screen. We good? All right. Okay, so if you would like to join one of our webinars, of course, next time you can do it through our website. Okay, all you have to do is join our webinars, click on Let's Go, and choose the webinar that you would like to join to. Okay, and just register, put in your first name, last name, and email, of course. It's for free. Today earnings season is pressing forward. Okay, we're doing the earnings season. Let's before we start, before we talked about the earnings season and everything, I would like to give you an overall look of what's going on in the market these days. I think it's important, okay, for you to understand what's going on in the market. I don't know if you heard, but yesterday, Theresa May, the Prime Minister of England, of the UK, she have decided to set a date, which is June 8th, for the elections in the UK. Since, as you probably know, on June 24th of 2016, there was a UK referendum, and the English people have decided to leave the EU, not be part of the European Union anymore, for many reasons, regulation reasons, and because of the immigration problem and so on. So about 51% to 49% they have decided to leave the EU, not be part of the European Union. It was great opportunity for us to trade and make a lot of money. If I'll show you the pound versus the US dollar, for example, we see pound versus USD. This is a daily chart. Okay, let's go backwards to June 24th. You see this huge red candle. This is a daily went down all the way from 1.48 all the way down to 1.32, which is a lot, all right? It's like 11% out of the pound back then. And on June 24th, a huge opportunity to make lots of money here. When the UK referendum has decided, the English people have decided to leave the EU, not be part of the European Union anymore. The pound have crashed, and this was the result. And yesterday, after that, the Prime Minister resigned. Okay, he quit, and then Theresa May became the Prime Minister in order to set the Brexit, the British exit, and make it happen. Now, what happened is Theresa May is not as powerful as she thought she will be in the Parliament, in the English Parliament. And so she needs the mandate from the people, from the English people, in order to set the Brexit and really make it happen on the English conditions, right? Just like the UK would like it to happen. And what actually happened is that she set a time for elections on June 8th to do it quick, okay, as quick as possible, in order to get the power in Parliament to really make the Brexit happen. And then a lot of people have decided, you know, the market have doubted the Brexit. So when the UK referendum have decided for a Brexit, pound went down. And yesterday, this is a daily chart, you see the pound got really stronger versus the US dollar since Theresa May have decided, set the date on June 8th for new elections, and the pound got stronger because of people doubt the Brexit right now. and the pound got stronger. You know what happens? We talked about it on past webinars. When the currency is getting stronger, the UK stock market have got weaker. Let me show you the FTSE, the 100 UK stocks with the highest value indices. There you go, FTSE. Look at this. UK market, stock market, it's still crashing down because of the possible because of the elections that are set to June 8th. Actually, an hour ago, they confirmed the date. So this is what happens in the market these days. All right. In the U.S. market, watching the S&P 500. This is a daily chart. This is a daily, weekly, daily. You see right now going down. If you put it monthly, okay, in the past 2 months, and so on. So this is what happens in the US market right now. And let's start talking about the earnings season. That's why we're here. So earnings season. The earnings season actually takes place 4 times a year, every quarter. Okay, all the corporations in the United States of America, all the big companies are handing out reports. And based on this report, just like I talked on last webinar, and you can find it on the Facebook homepage, based on these reports, if we know how to read the reports, and if we know how to to see the profit and loss and look at the EPS and all the specific numbers, we know exactly where the price of the stock will go and to generate some profits from that. So we have 4 times a year for about a month, okay? For about a month, all the US corporations and companies are handing out reports. This time it started, this earnings season started at the beginning of this month and will continue all the way to mid-May. So every day you can check it on Nasdaq.com or CNBC or on our website to just check at what day, okay, the companies are publishing and out their reports. It is either before market or after market, never during the market when the US market is open. Just to remind you, from 2:30 p.m. GMT time all the way to 9 p.m. GMT time, the US market is open and we can trade on these stocks. Great. By the way, if you have any questions, you guys can go to webinar. All of you, you can write me down on the chat window. If you have any questions, you guys on Facebook Live, just write a comment and I will try to answer your questions in between. Of course, I'm going to leave some time for a Q&A session at the end of the webinar. So major first quarter earnings are being published in the US. The banking sector was the first one, okay? Always the banks, every earnings season, the bank stocks, the banks are the first to publish, and then it kind of gives us the bigger picture of what's going on in the market. Very sensitive to politics, okay? The banking sector is under a lot of pressure, and let me try to explain why. Everybody remembers what happened. You know what? Let me show you and then explain. Goldman Sachs, okay, stock is trading around 5% lower on a disappointing report that took place yesterday. KBW is the index of banks, which is banking index, is trading 1% lower. Okay, let's see it. If I go to the MetaTrader, you can open the MetaTrader on a daily chart of Goldman Sachs. Let's go to Goldman Sachs. You look for G. Goldman Sachs, daily. Okay, great. Look at this. These are the elections, you see, November 8th. Goldman Sachs went up 30%. Actually went up all the way to $255 per stock, which was the highest point of Goldman Sachs, one of the biggest banks in America ever. And then right now we went down 5% after the report. We had a very disappointing report yesterday. I'm going to give you the reason. Okay, you can find it if you go to CNBC, Goldman Sachs. Okay, you have to click on earnings, and then let's give it a second. Okay, and then if you look at yesterday, you can see that Goldman Sachs reported first quarter of 2017 earnings of $5.50 per share on April 18th, which was yesterday, and missed the 5.31 consensus of the 18 analysts covering the company. So we expected it to be, the EPS was the earning per share. If you want to know what earning per share is, you can check our last webinar. Actually, you take the income, okay, the total income of the bank in this case, divided by the number of shares, and then you get the earning per share. It was lower than expected, and the whole report was not so good, but it's not a big surprise, because if you look at the past few days, even before the report, you can see we have a downtrend after a huge uptrend. The huge uptrend since the elections, okay, in all banks, by the way, they're very high correlated. I'm going to talk about it in a second, and this is why it gives us huge and great trading opportunities. Now, because if I know what happens with one bank, and if they're highly correlated, I can trade on the other banks, okay, on the US banks, and right now they're handing out reports, so take advantage of this opportunity right now to trade and make money, okay? Okay, so it went up 30%, you see here, from the elections. Donald Trump was elected on November 8th. Donald Trump said that he's going to cut taxes, do some government spending, and so on. In order to do this, he needed to get some money from somewhere. So he had decided to cancel the Obamacare. Remember Barack Obama, the last president of the United States? He had the Obamacare, which was a reform that actually was good from the Americans, as from his point of view. The idea was that the government, okay, is going to participate in the healthcare in order to help the U.S. citizens. We're talking about billions and billions of dollars that the U.S. government supposed to invest in the Obamacare. And when Trump was elected, he wanted to cancel the Obamacare in order to save some money, cut taxes, and spend some money from the government in other fields, all right? He's more of a capitalist than Obama, as you probably know. He's a right-winger and so on. So from the expectations when Trump was elected, okay, stock markets such as the banks went up. The price, as you can see, the stock, the U.S. bank stocks, they went up. Goldman Sachs, for example, 30%, because that part of the things that Trump said is deregulation. Okay, deregulation. Trump said he's going to take regulations off banks. Okay, think about it. Is it good for banks or bad? Of course, it's good. When we take off regulations from the banks have more freedom to act in their industry, which supposedly they're supposed to make more money, less regulations. It's better for the banks, and they're supposed to be more profitable. But then after the Obamacare failed, because supposedly Trump wasn't as strong as he thought in Congress, okay, the price of U.S. banks went down under a lot of pressure right now. You can see even the days before the report, this is the report, you see the gap down, a huge downtrend on US banks, all of them, okay? And this is Goldman Sachs. So Trump was elected, high expectations, deregulations, Obamacare failed, okay? A lot of uncertainty. You see the sideways trend, I'm sorry, went up and down, and then we had a huge downtrend because of the Obamacare fail, and then the report came, the quarterly report of January, February, and March, and as you can see, Goldman Sachs stock went down by 5%. Great, huh? Okay, back to the PowerPoint. If you have any questions, write a comment on Facebook or write me on GoToWebinar. I'll try to supply some answers for you. Okay. Back to the PowerPoint. So we said Goldman Sachs traded 5% lower, and the index of banking is 1% lower. Traders can diversify their portfolio and trade complete bank trade. Now, let me tell you this. I recommend you, in general, doesn't matter what you trade on, don't put all the eggs in one basket, right? Which means don't take all the money that you have in the account and take only one position. What I suggest, in order to do the right risk management and not put all the eggs in one basket, I recommend to diversify your portfolio in general, okay, regardless the earning season, and split the risk, okay? Of course, using protecting orders such as stop loss and take profit, and you can diversify your portfolio and trade complete bank trade. What does it mean? Major US banks are highly correlated. You have to understand that all the US banks are very domestic, which means they work in the same field in the United States. Most of them don't have a lot of branches out of the United States, Okay, think about Bank of America, Wells Fargo, JP Morgan, Citigroup, and so on. They work in the United States, which means that interest rate, if it goes up or down, any government, they're very, very sensitive to politics. Every government decision is very, very affects the U.S. banks very strongly. Regulations or deregulations, as we talked about, if they happen or not, it affects the U.S. banks strongly. As we can see right now, a lot of pressure on the banks. Other U.S. banks under pressure are JP Morgan, Citi, Wells Fargo, Bank of America. Just to show you the chart of them, you can see that they all work. See, let's take a look on JP Morgan. You see, same thing in the past few days, going down, okay, because of the, see, since the election, went up like crazy, highest point ever. Okay, a lot of expectations. The whole market is based on expectations, actually. And then because of the deregulation that didn't really happen, price went down. Citigroup looks the same. Bank of America, you want to see Bank of America? Okay, whatever you ask, guys. You say Bank of America, I'll show you Bank of America. Same thing, went up, and then regulations are still on, and then went up, went down. So you can take advantage during this report, during this earnings season, because of the bad reports of the banks. You saw what happened to Goldman Sachs? You can use it to trade, of course, short by selling, okay, the other banks and diversify your portfolio. I call it a bank trend. Okay, this is a huge opportunity right now, these days, during the earnings season, to trade on US banks and make money on this downtrend by selling them. Okay, good. So this is one thing. Let's go on to the other. And always remember, the trend is your friend, hug him. Okay. High expectations from the technology sector, okay? In the next few days, all the technology stocks, all the technology companies are going to hand out reports in about 4 or 5 days. I want you to be prepared to that, because you can make money on the US banks, and then you can make money on technology sector, and then on the commodity and energy sector. You know, it divided to sectors, the earnings season. It's about a month and a half that we have all the big corporations handing out reports. The FANG stocks will publish in the coming weeks. The FANG represents Facebook, Amazon, Netflix, and Google. These are the 4 giant stocks right now in the market, okay? For example, let's see what happens with Netflix. Look at Netflix stock. Daily chart. Is it going up or down? Let's erase this. You don't need the support line that I put here. See, it's going up right now. Okay, good reports. And the whole world is going from cable TV to live streaming. It's much cheaper. Okay, let me suggest you guys, if you would like to watch a movie or an episode of whatever series, go to Netflix. Okay, if you want to buy a book, you don't go to the store anymore, you go to Amazon. Everything is online today, and these companies are taking huge and great advantage and make a lot of profit from this. Now, I want you to understand something. As you can see, stock correlation, Amazon and Netflix are generating demand for live streaming, right? People would prefer to go to live streaming, and the advertisement on the internet right now, around 70 something, more than 70% out of the advertising in the internet, in the whole net, belongs to either Facebook or Google. These are the 2 giant companies that are responsible to more than 70% out of the advertisement in the internet, and Facebook and Google advertising via streaming platforms. Okay, so think about it. When you see any commercial during this live streaming, on the way to or out of the live streamers, you will always find advertisement. And this is why they're very, very high correlated. Another thing that I would like to tell you is that this technology sector, these companies that are going to hand out the report in 4 or 5 days, are much less sensitive to politics, such, you know, currencies, for example, U.S. banks, the commodity sector, the energy sector. They are very, very sensitive to politics, okay, to interest rates, to any government decisions, so on and so on. The technology sector is standing by its own, so it's much less sensitive, and pay attention to this. Now the PE ratio, we talked about it on last webinar. Okay, PE, higher PE ratio means more volatility. Okay, and a lower PE ratio on the same companies from the same sector means lower volatility. Now, why is this important to us? Of course, you can go on the Facebook page or on YouTube and find the last webinar, the earnings season part 1. Right now it's part 2. To find how do we find the information about the stocks. I talked about it. If you're more of a conservative trader, you would choose or try to trade on stocks that have lower PE ratio. If you like more volatility, more volatile, you're more of a risk lover, you want big profits but you don't care to risk more, you're going to go with a higher PE ratio. Stock and index, of course, always check the index before you start trading to see what's going on in the market on the future contracts, and EPS numbers in specifics, we talked about it last time. Check it out. Okay, traders should prepare their trading setups per stock. Of course, always put a support and resistance levels before publications. Try to understand how high the price of the stock might get in the next few days, a week, or for how long you want to take the trade, and how low. Okay, where are the prices that the investors believe that the price of the stock is too high or too low? Market sentiment considered solid, but fragile. Okay, VIX trading at 14.5. VIX is the index of fear. VIX above 16 reflects a volatile market. So right now it's not so volatile, but I think what happens with the banks during this earnings season, it might go over 16. So check the VIX before you trade. And of course, guys, good luck. If you have any questions, you're more than welcome to contact your account managers, okay, to ask. I would like you to take advantage of this earnings season. You can trade either on the US banks or on the technology sector right now. Take advantage of it. And of course, don't forget to diversify your portfolio and not trade all on one stock. Okay? So take advantage of this, these gaps ups and gap downs. If you know how to read the reports like I taught you last time, you can check it on Facebook. Will give you all the information needed in order to make the trades. Okay, of course, you're more than welcome to email me if you have any further questions. I would like to thank you very much for participating today and wish you a great day, great night, wherever you're from. Thank you very much for participating.